Next company, let's take a look here at Chipotle. I think we all know Chipotle. I say we all. I don't know if they're as nationwide or as prevalent nationwide as they are here in California. I know they are across the country, but maybe some people in the Midwest might not be as familiar with Chipotle. I don't know. But let's look at the numbers here for Chipotle. Current price to earnings. I was disappointed by this because the stock has just really fallen under pressure lately. They missed pretty bad last week on same store sales and then posted weaker revenue for the second quarter. Led to a big decline in the stock price, but price to earnings still 37.6 above the industry average at 31.1. Price to sales at 5, more than double the industry average at 2.4. Price to cash flow 27.7 above the industry average at 17.3. I mean, it's still expensive. And the reason it's expensive, I'm surprised by this. It's still growing. I mean, earnings per share over the last 1 year up 11.1%. Sales over that time period up 8.6%. I didn't think Chipotle had the ability to grow at that same capacity over that last year, as I thought they were, again, more established than 5-10 years ago. But they still look like they're maybe expanding store count and somehow driving further revenue.
I mean, Chipotle, that company has always been strange to me. I mean, their multiple that they've traded at has always been way higher than other fast food chains and things like that. But it looks like their stock price kind of peaked out early 2024, and that was around the time when they came under fire for having smaller portion sizes or reducing portion sizes or being a little bit more variable in the portion size that you were getting. And since then it's down quite a bit. It kind of got up to over $60 a share, and now it's at $40 a share, so it's lost a third of its value since that point.
And I wonder, I mean, I haven't been in a Chipotle in a while.
I was in one randomly like a couple months ago, but I don't go there very often.
And one thing that always concerns me with these companies is, you have this tremendous growth. And Chipotle, again, has had this growth engine for many, many years where it's been able to open new stores. And I don't want to say the growth is easy, but obviously when you go from 100 stores to 200 stores, it's much easier than going from 200 stores to 400 stores. I'm not sure where they're at now, but that growth gets exponentially harder the bigger that you get. Mm-hmm. At some point, this valuation that they're trading at, which, I look out to December 2026, estimated earnings per share is $1.42. I mean, our target sell price is still $23.57 compared to where you say it was still trading around 40.
It's over 40 right now. Yeah, 42.50. Yeah, I think is what it closed on Friday.
So, I mean, that still gives us a forward PE multiple of, let's see here, 1.42. I mean, it still trades at about 29.9 times those future earnings, for a business that I wouldn't say has overly secure cash flow, overly secure sales, and tremendous margins. A lot of times people will make the excuse for big tech companies that, they have secure revenue base and very strong margins. I don't think you can make that case with Chipotle here.
Did you have the comparison to the industry, Chase, for some of the earnings multiples on that?
Yeah, I mean, the earnings multiple, I was surprised by this for the industry, is 31.1 versus 37.6 for Chipotle. That's, again, on a trailing 12-month basis, not a future basis. But I can't justify paying 30 times earnings for a burrito company that doesn't have great margins. I mean, I say doesn't have great margins. I want to give them credit where credit's due. Obviously, their profit margin is 13%. That's good, but it's not like the big tech companies where they have these very, very strong margins. Mm-hmm. And I think that can change very quickly because all of a sudden sales dry up. Well, your margin dries up very quick as well. And if we did have a slowdown in the economy, I'm pretty confident people wouldn't go to Chipotle as frequently.
I don't know. It's tough to say. I mean, would people go? Because, I mean, I think part of the reason why, the culture, you could say, like Chipotle is because it was decent food, decently healthy. It was kind of, a place that wasn't, it's not like getting a cheeseburger at McDonald's, maybe a little bit better than that. So it was kind of like, quick, hit all those targets. It was pretty fast, pretty healthy, not too expensive. It's gotten more expensive and the portions have gotten smaller. And I think that's, part of the reason they got some negative press there. But I don't know. Would it be an alternative for people from maybe some more expensive types of foods to go to Chipotle? Or if people, it is still relatively fast. Yeah. So I don't know.
Yeah, I mean, I definitely think they created a great business model. I know their CEO, Brian Nickel, for many years, he did a great job. Now he's at Starbucks. You know, is that regime change, is that going to cause problems going forward? You know, was he that star CEO that was able to carry Chipotle for many years? I'm not sure, but I can tell you one thing's for sure. I mean, their debt to equity is 140%, not worth a questionable balance sheet and a high valuation to buy Chipotle at this point in time.
Yeah, that's what it comes down to. So.